Good morning, everyone. I hope you're all doing very well. It's Jared here again from the Alpha Capital Group, giving you all a quick preview for the week ahead. Now, I suppose when we look at the week ahead, the Russia-Ukraine narrative is continuing to dictate and bias viewpoints, as we said on Friday in our recap video. We have seen a lot of price action exchanges and movements overnight, which is something that we will be discussing very, very shortly on the charts. Now, I suppose from the data perspective and kind of looking towards the week ahead, we had Chinese data out overnight last night, and European retail sales this morning, which all kind of proved to be doing quite well. However, the Russia-Ukraine narrative and the bearish price action associated to that has driven the price action lower. And I do believe that, with the exception of probably the Thursday's data with the ECB interest rate and the CPI in the US, I would suspect the primary movements and fundamentals will be driven off the Russian invasion into Ukraine. Now, however, just to kind of complete the data recap or the data preview for the week ahead, today obviously not as busy as kind of some of the days later in the week. Tomorrow we have a GDP in Europe, which is something I've been paying very, very close attention to. We've got RBA Governor Lowe's speech as well in Australia, particularly off the back of the recent RBA interest rate meeting. We have GDP also in Japan as well, which would be something to keep a close eye on. Tuesday night into Wednesday morning, we do have the CPI in China, which is something, again, come Wednesday morning, something that I'll be kind of paying close attention to, because if those inflation figures are higher than expected, that could lead to overnight bearish price action again, filtering back into the markets. As we know with obviously the CPI data. Budget report on Wednesday for the UK will obviously be something to keep an eye on for those pound traders in the FX markets. Now, but obviously, as we turn to Thursday is going to be the busiest day of the week. Okay, the reason being is because we do have the ECB rate decision at 12:45, which I'm not expecting massive volatility from. I think the biggest volatility will come at 1:30. So, in a matter of seconds to minutes, we're going to have the CPI data in the US, followed by the President Lagarde's press conference. So, literally within the space of a couple of minutes, we're going to have a very, very important CPI data print in the US, followed by, as we said there, the ECB press conference, and I suppose the deepening, tensions between Russia and Ukraine. How is that going to affect the ECB's economic outlook? So it'll be all eyes really on President Lagarde come 1:30 on Thursday. Now, again, that'll be the big one. We do have a few other bits and pieces coming for the latter part of Thursday afternoon. We have Thursday evening as well. We do have some data coming out from Australia and New Zealand, but primarily speaking, Thursday's data would be that lead up the ECB into the jobs, the data, the inflation data, should I say, followed by the ECB press conference, and I suppose more broadly speaking, in the opening. Thursday, as we know, it tends to be the most volatile trading day of the week, so it's important to be able to recognize that Thursday should in theory be a very, very busy week. To round off the week again, Friday there gone by, we had the NFP data in America, which showed a very, very upside surprise. However, the markets didn't really take too kindly to, I suppose, the sell-off into close regarding, again, this Russia-Ukraine narrative, and the markets overall, broadly speaking, has continued to grind lower despite the solid job performance in the US. Now, I suppose if you're comparing the US to Europe, the US-based indices are performing strongly, or much stronger compared to that of Europe. Okay, you look at the DAX, you look at the Euro stocks, all in bear markets now. I think the slump now is between 22 and 23% from the January highs, whereas you look at the DAX, or you look at the Dow Jones, you look at the S&Ps, we're down somewhere between kind of 12 to 14, 15%. Now, the NASDAQ has moved into bear market territory as well. And again, that's because of the assimilation associated with tech and growth stocks being more greatly affected by both Russia-Ukraine tensions, invasion, and second to that then is the global widespread inflation data that's kind of creeping up across the board. As we said with Friday, just to close around the week and the fundamentals and the data, we can see here that we've got GDP, some kind of strong data in the UK on Friday morning at 7 o'clock. So worth keeping an eye on that. We do have harmonized consumer prices as well in Germany, as well to keep an eye on in Europe. And then we have some Canadian data, 1/2 to round out the week with the Michigan Consumer Sentiment. So this one here, the Michigan Consumer Sentiment Index, is often quite an underrated piece of data to keep an eye out as well. So come 3 o'clock on Friday, I will also be keeping an eye out on the Michigan Consumer Sentiment, because that will round off the data for the week. Now, of course, as we look at the Russia-Ukraine, the sanctions, we're looking at Netflix, TikTok, Visa, MasterCard. All of these companies has basically cut ties with Russia for the moment, and it's basically impossible for Russian individuals, Russian entities to transact, particularly when it comes to Visa, when it comes to MasterCard, when it comes to I suppose the SWIFT banking system, which we talked about the economic sanctions last week as well. So a lot of these leads to kind of heightened uncertainty. And as we spoke about before, the markets really don't like this uncertainty. Now, just moving across to the markets overnight, I suppose the big one, if we look at the markets overnight, we have seen the dollar, broadly speaking, tick higher again. So that's alluding to that risk-off narrative that's in the markets. The price action is very much continuing to move higher. Okay, if we look at gold briefly overnight, if we just look at the 4 hour for a second, or even the 1 hour on the shorter time parameters, you can see here that the gold had initially come into $2,000 just on the open last night. We did gap higher, price action moved higher. However, since then, the price action now is testing this $2,000 mark again. Now, this chart that you would have seen initially was this weekly chart, and this is something that I was kind of paying close attention to last week, and the emergence that if the price action breaks 2,000, we've got a short retest into these previous highs here that was set last May, last June. And if this Fibonacci structure sequence is to confirm, we could well be looking at $2,250 potentially hitting gold in the back end of this year. So definitely worth keeping an eye on that on the broader perspectives. If we look at oil overnight as well, oil was fairly consolidated last week, kind of choppy back and forth between kind of 108, 110 lows and 116 highs. That broke straight through overnight, and the price action opened up at around about kind of 125, 126, 127. Even on some exchanges, if you looked at UK oil, which is Brent, it even went into 130. Now, I have seen some exchanges, some platforms quoting 133, 135 for oil, which again is adding in much heftier spreads and widening differentials on the bid offer for some of these platforms as well. So it's important that you're checking the spreads, because with this volatility, a lot of these kind of, shall we say, bucket shop brokers will have much wider spreads. So it's important to factor that into consideration as well. All right. If we look at, again, the S&P index, the S&P did sell off last night on the open. We did continue to grind down lower. The price action now has cleared through this 4280, 4300 level. And this Fibonacci sequence, again, looks to potentially be playing out. So worth keeping an eye on this on the S&Ps. If so, when we break through these lows here, short-term lows, we could well be seeing kind of more further price action pronounced to the downside and more bearish sentiment coming in, particularly when you look at, for example, this morning, gold was up to kind of 1.5%, 2%. Oil was up, 8, 9%. The dollar was up, euro dollar was down another 0.5%, and the indices obviously floating down. Europe obviously down 3%, and the US down kind of 1.5%, with the NASDAQ down a little bit further than that. Again, if we look at the Dow Jones, it's really starting to break down too, particularly on the weekly time frames, just to kind of give you that broader outlook. We're now breaking through these 33,000 handle, or trying to break through it now at the minute, 33,000 to 33,200 area now. If this breaks, we'll be looking for a weekly wick engulf and potentially taking out the 32 handle and potentially more downside. So when you compare the Dow Jones to the European indices, it has performed quite well in comparison, but it does look like there's more downside coming here. So worth keeping an eye on that as well. Okay. When we look at the NASDAQ, again, NASDAQ, as we said, the leading bear of the 3 US-based indices, we have broken through, we've cleared down, we've continued to kind of descend lower into this kind of 13,500 handle. We did see a little bit of a bounce off 13,500 this morning on the NASDAQ, but of course, any of these upside movements tend to be temporary at the minute, as we're seeing here. As we saw last week as well, we had that spike through 61.8 on the fibs, but the price action has rolled over quite significantly as well. So all eyes on the price action, whether you're higher time frame, whether you're shorter time frame, whether you're looking at price action or you're trading indicators or whatever the case may be, the volatility is pronounced, and the volatility is on both sides. So it's not just on the bearish side or the downward sloping moves, it's also on the upside as well, as we saw in previous days and weeks as well. previously 24th of February, we saw this massive upside move before the consolidation and price actions now grinding lower. So definitely keep an eye on that through the course of the week. We've gone through the data. I suppose, again, as always, keep an eye on the latest developments regarding Russia-Ukraine. Putin's comments over the weekend, again, leading to kind of more bearish sentiment as he classified the economic sanctions as a declaration of war. So again, that's definitely not going to help the situation in terms of creating a more positive narrative for the markets. And that is why we are still very much tilted to the downside. Until later in the week, everyone have a great week and trade safe. Utilize your risk management, because of course, if you're not utilizing risk management, you're creating a lot of unnecessary and undue risks for your trading account. Until Friday,